Today we're going to be looking at some pretty interesting financial news that you might have missed. We've got the U.S. Steel merger drama,
Always a good time.
some surprising stock market trends, and even some intriguing investment ideas for 2025.
Yeah, I think there are going to be some gems in here.
From nuclear energy to, believe it or not, Dutch Bros coffee.
It's a it's a wild world out there in the financial markets for sure.
Okay, let's shift gears to a story that's been making headlines. The U.S. Steel merger drama.
Oh yeah, this is a big one.
So Nippon Steel was all set to acquire U.S. Steel for a cool $14.9 billion.
Wow.
But President Biden stepped in and blocked the deal,
You did?
citing national security concerns.
This situation really highlights how geopolitics can have a significant impact on financial markets. The Biden administration is clearly signaling a more protectionist stance, especially when it comes to critical industries like steel production.
So it's not just about two companies merging.
No, not at all.
It's like a sign of broader economic and political forces.
Precisely. And this trend of governments prioritizing national security over purely economic considerations is something investors need to pay close attention to.
Yeah, it can have implications for a lot of industries.
A wide range for sure, especially those with global supply chains or exposure to sensitive technologies.
Now, speaking of complex, let's talk about the manufacturing sector, specifically materials. It was the worst performing sector in 2024, largely due to the global economic slowdown.
There are some analysts who believe the material sector could rebound in 2025.
Okay, so there's hope.
Yeah, and two key factors are driving this optimism. Easing inflation and the potential for economic stimulus from China.
So if inflation cools down, that could boost construction and manufacturing activity, leading to higher demand for raw materials.
That's the general idea here.
And if China, which is a major consumer of raw materials, implements some sort of economic stimulus package that could further boost demand and drive growth in the sector.
If those factors fall into place, investors who got in early could see significant returns.
Okay.
But if those predictions don't pan out, the sector could continue to struggle.
Got it. So it's not a sure thing.
No, not at all. It's a gamble, and investors need to carefully weigh the risks and potential rewards before jumping in.
Right. So the material sector is a bit of a wild card.
Yeah, you could say that.
But there are some other areas of the market that seem to be showing more consistent promise.
Oh, yeah, for sure.
In the energy sector, for example, Constellation Energy is continuing its strong performance from 2024.
They're on a roll.
Their stock rose after landing a $1 billion deal to supply nuclear energy to the U.S. government.
That's a big deal.
So that's huge.
Yeah, it's a significant win for Constellation, and it speaks to the growing interest in nuclear energy as a clean and reliable source of power.
It seems like nuclear is making a comeback.
It certainly seems that way, and it's not just Constellation. We're seeing other companies in the nuclear energy space attracting investor interest as well.
Okay, it's a sector to watch closely in the coming years.
Absolutely.
All right, let's shift gears to a completely different sector. Rivian, the electric vehicle manufacturer, managed to meet its lowered delivery target.
They did.
And that sent its share price soaring.
Huh. Interesting.
So even after they had to lower their expectations, they still saw a stock surge.
Well, it's an interesting example of how managing expectations can be just as important as exceeding them.
Right.
In a volatile market like this, investors are looking for any sign of stability and predictability, and Rivian, by meeting its revised goals, demonstrated that it can still execute its plans and deliver on its promises even in the face of challenges. Yeah, and I think there's also a deeper psychological element at play here. Investors, especially in the tech sector, are often looking for companies that are pushing boundaries, innovating and disrupting the status quo.
Yeah, I could see that.
And Rivian, despite its setbacks, still represents that vision of the future of transportation.
So there's almost like a faith component.
Yeah, a belief in the company's long-term vision.
Okay, let's talk about a company that seems to have mastered the art of building a loyal customer base.
All right.
Chewy, the online pet supplies retailer. They received an upgrade from Wolf Research and were even named a top stock pick for 2025.
Wow, that's impressive.
So what do they do that's so special?
Well, Chewy's a fantastic example of a company that has really found its niche and built a loyal customer base.
Okay.
They've done an incredible job of creating a seamless online shopping experience for pet owners, offering a wide selection of products, competitive pricing, and perhaps most importantly, exceptional customer service.
It's a reminder that sometimes the simplest business models are the most effective. Provide a great product, make it easy to buy, and treat your customers well.
You got it. And in Chewy's case, they've managed to tap into a market that is both passionate and recession-proof.
Passionate and recession-proof, that's a good combo.
Yeah, people love their pets and they're willing to spend money on them even when times are tough.
Yeah, that makes sense.
So that's why they're being touted as a top stock pick for 2025.
Okay.
They've got a proven business model, a loyal customer base, and they're operating in a market with strong growth potential.
All right, let's move on.
Okay, which one?
Cerence.
Oh, yeah.
Their stock absolutely skyrocketed after partnering with Nvidia, a leader in AI technology.
They did. That was a big jump.
What's driving this surge in investor interest?
Well, this partnership is a game changer for Cerence.
Okay.
It gives them access to NVIDIA's cutting-edge technology, allowing them to enhance their voice AI solutions for automobiles.
Interesting.
And for investors, it signals that Cerence is serious about staying at the forefront of innovation in a rapidly evolving industry.
Now, on a slightly more sobering note, the alcohol industry took a bit of a hit recently, following the Surgeon General's call for mandatory cancer warning labels on alcoholic beverages. This led to a decline in stock prices for several major alcohol companies.
That makes sense.
So this is a big deal.
It is. This situation highlights how even industries that have been around for centuries aren't immune to shifts in public health concerns and evolving regulations.
So investors need to be aware of these potential risks.
Absolutely, and factor them into their decision-making.
It's a reminder that investing isn't just about analyzing financial statements and market trends.
No, it's much broader than that.
It's about understanding the broader context in which a company operates.
You need to have a holistic view of the industry, the regulatory environment, and even societal trends to make informed investment decisions.
All right, let's talk about a company that's facing a different kind of challenge, Carvana.
Okay.
Their stock price has been on a steady decline, following accusations of accounting manipulation by Hindenburg Research. So what's the story here, and what does it mean for investors?
Well, this situation underscores the importance of transparency and ethical accounting practices.
Okay, so trust is important.
It's paramount. You know, any hint of financial impropriety can severely damage a company's reputation and erode investor trust.
It's not just about the numbers themselves.
No.
It's about the integrity behind those numbers.
Exactly. And that's why it's crucial for investors to do their due diligence, carefully scrutinize a company's financial statements, and look for any red flags that might indicate questionable accounting practices.
It sounds like a healthy dose of skepticism is essential,
Always a good idea.
especially when dealing with companies that have faced accusations like these.
For sure.
Now, speaking of skepticism, let's dive into what some investors are saying about 2025. Some of the top stock picks we've seen include familiar names like Nvidia and Palantir, but also some interesting newcomers like Intuitive Machines and Chewy Corp.
That's a fascinating mix, representing a range of industries and investment themes.
So it's not just about throwing darts at a board
No, definitely not.
and hoping for the best.
No, you gotta have a plan.
It's about having a clear and compelling rationale for each investment choice.
Exactly. And understanding these investor theses can be incredibly valuable, even if you don't end up investing in those specific companies.
Really?
Yeah, it gives you a glimpse into how experienced investors think and what factors they're considering when making their decisions.
Oh, that's interesting.
So it's like a learning opportunity.
All right, let's take a closer look at some of these investor theses and see what insights we can glean from them.
Sounds good to me.
Let's start with a couple of established players that some investors believe are poised for a comeback. Nike and McDonald's.
Two classic American brands.
What's the thinking behind these picks?
Well, the thesis here is that both Nike and McDonald's will return to their core strengths and benefit from increased consumer spending as the economy continues to recover.
Okay.
Nike has been facing some challenges in recent years, but some investors believe they're poised to regain market share by focusing on their core product lines and innovating in areas like digital marketing and personalized customer experiences.
So going back to basics, but with a modern twist.
Exactly. And as for McDonald's, they'll benefit from their scale, affordability, and convenience as consumers become more value conscious in a potentially inflationary environment.
So when wallets get tighter, people go for the familiar and affordable.
That's the idea. It's a classic value play.
All right, what about some of the more unconventional picks like Intuitive Machines and Chewy Corp?
Now we're getting into the more speculative territory.
Yeah.
Intuitive Machines is an interesting one.
I've heard of them. They do something with space, right?
Yeah, they've been attracting attention due to their NASA contracts and successful lunar landings.
Right, so what's the thesis there?
The investor thesis here is that Intuitive Machines is well-positioned to capitalize on the growing interest in space exploration and the increasing role of private companies in this sector.
It's like a bet on the future of space travel.
Precisely. And as for Chewy Corp, they're a major uranium producer, And the thesis here is that the growing demand for nuclear fuel, driven by the resurgence of nuclear energy as a clean and reliable power source, will benefit companies involved in uranium production.
So it's a play on the increasing demand for nuclear power.
Exactly. And then we have Dutch Bros, the coffee chain that's been expanding rapidly and leveraging mobile ordering technology.
Dutch Bros. That's an interesting one. So what's the thesis behind that pick?
Well, the thesis here is that Dutch Bros is effectively catering to evolving consumer preferences, particularly among younger demographics, by offering a unique and personalized coffee experience and embracing technology to enhance convenience and speed of service.
So it's about understanding what the next generation of coffee drinkers wants.
Exactly, and finding ways to meet those needs.
I like it.
And that's what makes these investor theses so fascinating. They offer a glimpse into how experienced investors are thinking about the future, what trends they're watching, and what factors they believe will drive success in the years to come.
I'm curious, what were some of your biggest takeaways from our deep dive?
Well, for me, it's how interconnected everything is. We can't just look at stocks in a vacuum. Geopolitics, government regulations, public health concerns, they all play a role. Remember the U.S. Steel merger and the Surgeon General's warning on alcohol?
Right. Those definitely weren't your typical financial news stories, but they had a big impact on the markets. It really highlights that investing requires a broad understanding of the world, not just financial statements.
Absolutely. And speaking of understanding the world, those investor theses we talked about were really eye-opening. Seeing how experienced investors are betting on the future, like with Intuitive Machines and Cameco, really makes you think about the long game.
It's almost like a peek into a crystal ball, trying to anticipate the big trends that will shape the world and the markets in the years to come.
Yeah, it's definitely not just about picking stocks based on today's news. It's about understanding the forces that are driving change and how those forces will create opportunities and risks down the road.
And that brings us to another crucial point, the importance of research and due diligence. Remember Carvana.
Oh yeah, that was a tough lesson in the importance of looking beyond the hype. Accounting manipulation, that's a serious issue, and it shows how crucial it is to really scrutinize a company before investing.
It's a reminder that trust and transparency are everything in the financial world. Investors need to be skeptical, ask tough questions, and demand accountability from the companies they're considering.
Couldn't agree more. Don't just take things at face value. Dig deeper, check those financial statements, and look for any signs of trouble.
So as we wrap up this deep dive, I think the key message is stay informed, be adaptable, and always do your homework.
Well said. The financial world is constantly evolving, so stay curious, keep learning, and never stop exploring.
Absolutely. And remember, this deep dive is just a starting point. You should always do your own research, consider your financial goals, and remember that all investments come with risks. Thanks for joining us for this deep dive into the exciting world of finance.
Until next time, happy investing.